Hello, everyone. Well, if you haven't heard, the Canadian government recently announced some massive new changes to the mortgage landscape. And these changes are going to take effect this Sunday, December 15th. They're aimed at making qualifying for purchasing a home a lot easier, which will in turn probably boost up both sales and price throughout the Canadian landscape. But I don't think these measures alone will create a massive boom. But instead, they're going to offer a secondary tailwind to what is already becoming a more stable and progressive market as we head into 2025. So the very first change they're making is that they're allowing first-time buyers to now amortize their mortgages over 30 years instead of 25 years if they're getting an insured mortgage. So previously, if you're getting an insured mortgage, your amortization was capped at 25 years, and now that cap increases to 30 years. And so what that does, for a typical buyer in Toronto, that will increase their borrowing power by about 9%, which is significant. But it is important to note that according to the Bank of Canada, this year, only 44% of sales are to first-time home buyers. And in the entire mortgage market, only about 20% of mortgages are insured mortgages. But with these changes to amortization and the next change we're going to talk about in a second, I would expect that 20% market share of insured mortgages will probably increase over the next year or so. But I still think that the impact of that change will be quite minimal because it only applies to first-time buyers. The second part of the amortization change rule is that, so the first part is that only first-time buyers, their amortization can increase to 30 years from 25 years. The second part of that rule is that anybody buying a pre-construction home also qualifies for a 30-year amortization. So that part of it is not only for first-time buyers, that applies to anybody buying a new home qualifies for 30-year amortizations. And now, so the second mortgage change, which I think actually will have a lot bigger impact on the market, is the ability to insure mortgages up to $1.5 million. Previously, like as in today, anything over $1 million, you had to put down a minimum of 20%. So if we take a typical Toronto semi, for example, let's just say a semi that's worth $1.3 million. Today, if you're buying that house, you have to put down a minimum of 20%, which is $260,000. As of Sunday, that will change. And the way it's structured is that you'll have to put down 5% on the first $500,000 of the mortgage, and then 10% on the balance of the mortgage. So, again, if you're buying that $1.3 million home, you're putting 5% down on $500,000, which is $25,000, and then you're putting 10% down on the balance of the mortgage. And the balance in this example was $800,000. So $80,000 on the $800,000 and $25,000 on the first $500,000, which is a total of $105,000. So again, you're buying a $1.3 million home today, you got to put $260,000 down. You buy a $1.3 million home on Monday, December 16th, you can get away with as little as $105,000. So now the big caveat to all of that is that you still have to qualify for the new mortgage, right? So again, if we use that example of $1.3 million, today you put a minimum of 20% down, so you've got a mortgage of, $1,040,000, and you would have to have an income of around $190,000, $200,000 combined family income to qualify for that mortgage. When you can, now buy a home at $1.3 million with only $105,000 down, meaning that you're getting a mortgage of roughly $1.2 million or $1.195. Now you have to have family income of about $220,000, $225,000 down, depending on the lender. So you do, as much as you can qualify for more home and you can insure homes that are worth more money, you still have to be able to qualify for that, which will be very hard. There's a lot of families in Toronto who don't make combined incomes of $220,000, $230,000. So that's a really big thing to keep in mind. But nonetheless, I think these federal rule changes should have a pretty significant boost on the market, especially in early 2025. But it may serve to stab themselves in the foot. As people qualify for more and can have longer amortization periods, they might start buying more expensive homes or even offering more on homes, which should probably serve to jack up the price of home. And as the price of home increases, the affordability decreases again, right? So these will help in the early stages with the affordability, but as these policies themselves, they will boost the prices up, and that will kind of erode away that affordability as well. So, again, I think the first half of 2025, we probably will see a pretty quick uptake, and I think prices will continue to climb as they have been for the last few months. But, as more people start taking advantage of these rules, less people will be able to take advantage of them because prices will continue to climb as a result of them. But stay tuned. Like I've said in my past videos, the monthly ones, the market's already, has found stable ground. It's been trending up both sales and prices. And I think these new rule changes will, further booster that. But I will keep my eye on things. Of course, as always, I'll report back to you. If you have any specific questions about these new mortgage rule changes and you want me to put you in touch with a trusted mortgage broker, feel free to reach out to me anytime. And thanks again for watching this video. We will talk to you soon. Bye-bye.